Good morning, my friends, and welcome to the Breakfast Club. Now, my name is Darren Hancock, and I'm your host today for this Wednesday, the 24th of April, 2024. I hope you all had a lovely, lovely day. Yesterday, shout out to Thomas. Good work on your charts, Thomas. The fear, don't worry about the fear, buddy. You're getting your setups nice and slow. Take your time. You're doing great. I love the posts that you're making there on Telegram, and I love the fact that everybody's helping out where they can. The community is working out exactly as I'd hoped it would. We got like-minded, really kind, like-minded people in here trying to help each other out and move everybody forward in a successful way. And I love that. So congratulations, Thomas, making that trade yesterday. You found your setup. The fear about where to get out, that'll come, you'll sort it out piece by piece. You'll get that setup where you get the entry just as you want it, and then you'll look for your way you're going to manage it from either the back end, the front end. You'll either manage it with a fib tool or you'll manage it with PD arrays. The PD arrays are a more advanced way of trying to manage it. The stop loss moving with the failsafe is another way of managing it from the back end. And obviously the fib tool is the quickest, easiest way to manage it inside a range. So that fear of what do I do next, that will slowly start to dissipate when you start to zero in on what it is that you're trying to aim for, versus I'm getting in now, I know what to look for, so I execute the button. So you're in, then the fear starts about where do I go, how do I manage this, right? And that'll all come over in time. So I'm excited for you there. So let's have a quick peek at what's going on here. So this is the NASDAQ on the daily. So you've returned back into this breaker right here, into the wick. I thought we'd kind of come up and tap into that little fair value gap you see up there on the daily. See that right here? I'll just block that out here. I was wondering if we're going to come up and tap that. So keep that in mind for 10 o'clock. We might just get a nice reversal here. So look for this candle. If we end up, because we've taken out this low here, if we take out these other lows, like if we get all the way down into this level right here, which we have already, we've already gone through it. So if we take out these equal lows with a down close candle and we get another one of these fair value gaps to support that, I like this for potential reversal back up into this area here. And then tomorrow's reversal back down into this, which is the inevitable goal for the swing. So this is the reversal on the daily that we're looking for to come back either today or tomorrow. So I'm looking for another little pump back up into here. If we don't get it, that's fine. We have a reversal here. We break down below the breaker here. We return back into the breaker here for a short. Now we're just looking for the reversal to support running back into that range after taking out a low, or we look for continuation on the downside back into this fair value gap here, and then eventually the one below it here. We've had one bold candle get through 1, 2, so usually it returns to the second one to get a run up into the continuation. So I'll be looking here, anywhere inside this area here. If we get this stick here and this stick right there, anywhere inside that, I'm looking for a reversal. And if we just march through it, then you're looking in here. Yes, let me make sure we're up and running here. And there we are. Oh, we got 8 souls on board already. Excellent. Welcome. Welcome. So I'm looking for, we're on ES here, right? ES, same similar setup. Probably the same thing for, no, it's not the same thing. Body traits below it, reversal, come back into it right here. It's a nice little reversal at 2:30 in the morning. And here we are. Back into this order block, equal lows. Mean threshold of this order block here on the hourly, 15-minute will bring you back to a fair value gap fill. So you're looking for a continuation on the downside. For Dow Jones, Dixie's returning back into this order block here. Going to rebalance this area. Then expect to see it to roll over. We're looking for this order block to hold. If not, just above the mean threshold of that candle for continuation on the downside for a fill of this fair value gap here. We're through the mean threshold of that, so my thoughts are returning to this order block, or at least this one's low for the high of the day, and then reversal coming back into here. So you're looking for a run back into this fair value gap here, or that's the daily. This was the hourly, I think. No, that's daily. So if we do get a pop back down, we might get a run back into the top of the inversion again. If we drive all the way down for a fill of this and then continue back to the upside, looking for a run back into this daily fair value gap just above price action here in the British pound. So you're looking for, there's a nice reversal. There's the reversal pattern there. Body breaks above it right here. The return into it here, and then the continuation to the upside. So keep those in mind. And it's just a simple reversal pattern. That's all I'm showing you here. Now you're between, you see this reversal right here on the 1 minute chart. See how the body breaks above it here? You come back into it right there with precision. There's like zero draw down there. And then you run up for old highs as you go. Then you get this reversal. Once you break these old highs over here, you get the reversal. And then if you can't get the reversal right here, see how the body returns in it, and you're lucky enough to get right in on it there for continuation for selling off on these rejection blocks, and you're returning back to the premium discount. So the discount that started the run, premium reverses the run back down into that discount run again, that you didn't get a chance to get in on the first one, but you did get a chance to get in on the second. Like this first one here, second one's here, you got above that one inside there. This one here, you didn't get a chance to get in on it unless, yeah, I guess you did right there. So you get one more opportunity inside here for reversal back up into this range. So you go from here to here, back to this one, then run back up to that premium one. Then you look for a reversal again, which is right here. You're just barely taking out those highs there. You want to see a return back into this breaker and then drive back down into this range here. So you're getting smaller and smaller as we go here. They're consistent. They happen on all time frames. So this is, see how this daily one here, this reversal happens? You've got a candle that trades above it. So getting long on it here, here, and here, those are all opportunities to go long for the premium array that causes the reversal. So here's your premium. We ran above these little highs here. You ran below it. If you can't get back into it here, which you would perfectly get into it right there, that's your opportunity to get in it. And then you continue on the downside and wait for the next reversal. The next reversal occurs. So if you're short on this one here on the daily, you would 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days later, 11 days later, you break this high. So here's the reversal. You come back into it. You close this short off here now, and now you'd go long back into that range, up into there. So that would be the overall objective for me now, is to start pushing this to higher prices. So I would expect the American dollar to start dropping, and for this British pound to start running back up based on this reversal pattern right here. So yeah, because that happens on all time frames. If you break through, as in, see how you swung below this low here? You've got this one and this one overlapping now. You're hoping to get back to here. You don't get it. You have a swing point here. And as soon as you see one of these forming, you got to go, okay, this could be a swing here, and we could be running up higher into this range. So if we get a body that breaks that on the high, and see how it closes right on it. So you're going, is that going to be the reverse to come back down now? So if your fail safe is sitting right there, you just got your stop loss taken. Equal highs. So you're inside the consequent encroachment, or the equilibrium of this whole range right here. And if we pull the fib tool from top to bottom here, %. So you just dip into that 50% range. So you're into the discount portion before running back up into the premium portion again. So not a great place to make a trade. Let's look at Euro. Euro's giving us the same setup. Ooh, let's look at the close on this candle right here. The low is 993. The close is 713. So this one is actually closed above this. So any entry back in here for a long, these are all potential buys for longs now for Euro. So you could put a buy order in right there. We're going to put a buy order in right where we are right now. And then we'll just let those two run. Stop loss will go, it's only $8. These are really small trades, but you'll get my point. So what I'm doing is I'm running for up here. It doesn't really matter about the money. What I'm after is the run to a higher PD array. So the PD array that initiates that whole run, which is right in here, I think it is. Right there. So if we run back up into here, that's where the stop loss would be on the daily. So we're just going to try a long trade on the day. One there, and then we'll stick the other one. Where's the take profit on that one? When in doubt, get rid of it, start again. Take profit, put that one up right at the very high there. Let's put stop loss down here. I'll let those ones go. I'm going to leave those in for the first long, like 1 week or 2 week trades going long. So, sorry. I'm going to get one of those on air signs above my door saying, I'm on air. CAD. Now we're back from New York. Prices are coming back down. That's the way it's supposed to go, isn't it? You'd go away and the exchange rate goes crazy. Then when you come home, it goes back. Just because they know you're leaving that day. Canadian dollar. Nothing on here. What are we looking for news events this morning? There was an 8:30 news event. Forex factory. Yeah, there was just core retail sales, durability goods, and that's it for today. Yeah, it's all done today already. Okay. So wait for tomorrow. Fair value gap. If we get up on top of this, look for this to provide a little more support to run higher. I'd like to see that hold price right here on the daily and then start coming back down again. So this could be that little dip up in the American dollar. We're looking for a run into that order block, and it did. So now you're looking for a rejection on the way. So you're expecting this all to come back down from here. You're allowed to come up into the fill of that and the mean threshold or the bottom of that candle. That's where the upside is. I'm kind of looking for on those. US dollar, New Zealand dollar. So we've got this swing point here and we have taken out this old low here. So if we get a body of trades above here, this is a linchpin right here. This is what you want to see. The body trade above this, get on top of this to go long. You want to see it start to climb from here. But you want to see a body close above this. So we want to see today's candle close above. Thursday's reversal back into this fair value gap you see here, and then go long from here. These could be some really nice, delicious longs we could catch for a couple of months here. Australian dollar, see how it's already taking off already? There's the swing point below an old low. We have our swing, body breaks above it. Now you want to see this reverse, get back down into here, catch that for a long, back up into the reversal here. And then eventually the equal highs. Another example here, we have a swing occurring. You wait for a body to break that high, which is this one here. And if you can't get back in it, you look for the breaker that sets up the run. And that's the breaker right there. You don't even get that. Interesting. So this ran all the way through 1, 2, and you get the second one for the continuation to the upside. This reversal here, see the body breaks just above it right there. Make sure you see this. I'll line my line up right on there so you get to see that this body right here trades above that line. That's the reversal. Takes out old lows. trades back into it here, and then you get the long, and you wait for the reversal. So if you're in this, Thomas, if you're in this and you want to manage this from the back end, you want to use your fib, or not your fib tool, but your fail-safe. Set up the rules for your fail-safe, and your fail-safe will literally be put behind every one of these stop or these fair value gaps you see here. So they're dynamic, so the fail-safes will always flex to the size of the fair value gap above you. So you'd be sitting here, nothing. That one forms right there on that candle. Stop loss goes down here. Then this one forms, stop loss goes down here. And you continue to the upslope. So your stop loss is sitting right here. And you wait for the next fair value gap to form above you. Then you move behind that. So you're staying in this trade with full profits, or your full trade is going on, or you scale out portions on the way up. So that's managing the back end. And right now you'd still be in this full trade right from this reversal right here all the way up to here. You're still in that with the stop loss sitting right below here. I'd move it right into here because you wouldn't want to see this get retapped one more time. You want to see that order block hold price now and continue to the upside. Bit noisy on the old phone there, was it? Aisle or window? I'll take the aisle seat. Doesn't matter, love. She's booking flights. She's holding up a sign. Aisle seat or window seat? She's so cute. All right, so oil. Where are we sitting for oil? You got this reversal that's happened here. We've dipped right into it. Even dipped down to that little guy right there. And now we're looking for a run back up for the upside. That's on the 15-minute. Got nothing on the 1 minute in terms of clean setup. You'd have to break above this high here to get going on the upside. So you're looking for more upside on oil. If we break through that one with a body candle, come back inside it. That looks nice for continuation. Gold. I have to start looking at gold now because I've entered into that trading view contest. So now I'm going to do gold, or Trading View's putting another contest on in May. So I'm going to enter that, and that'll be what you'll see on my charts here. So you'll see me trading a demo account in a contest and see how we do. We'll see how we do. Yeah, gold. Where are we at with gold? Yeah, unfortunately, it's got to be on Oanda. They don't want to let you use this other one. And you watch the difference when you go to Oanda. They end up putting tons of wicks in here. So you know there's some manipulation going on there with that broker. It's not as clean as you get the futures market. We have no body breaking this high yet. We have a swing here, taking out these highs. We have a swing here, taking out all these highs. We have a swing here, taking out all these highs, or from previous highs behind you. And we finally traded back into it here, into it here. We have another reversal here. Trades back into it to get short. We have a reversal above this old high here. Body trades below it, come back inside it right there. It's perfect entry for a short. You're running for all these lows down here. Obviously, you collect that as you go. And then you're looking for a reversal. If gold's going to start getting some strength again, you want to look for a reversal that supports an upside run back into these premium arrays again. And right now I don't see anything that supports it just yet. Well, I guess that one trades above. You want something clean like this. See how this is sharp? It's a clean run back up into the, like it's a nice, you don't have these big wide consolidations. You got just a straight down. I've got intent to get down there, right? Not this waffling around huge blocks down here. You want to see something that's clean. I've got intentions, and you want to just get this quick opportunity to get in, and you want to get out, move in the direction you want it to go. If not, just wait for a different setup. Wait for another day. Banks have made that April low we're looking for. Now we've traded above here. I like this. Laurentian Bank looks good. Toronto Dominion Bank looks good. See, these are all potential reversals. So if we get a return back into here in the next couple of days, like a Thursday reversal back in here, that's your long for these equal highs and above. Bank of Montreal, traded above it, come back into that tomorrow, go long. You're running back up into this higher one above you, inside that range. That's almost 10% return, or 10% return. And I think that plays a couple of percent dividends, like 4 or 5% or something. ETFs are making the turn as well. They've taken out the low, reversal, 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 reversal. Well, this one hasn't got the reversal yet, but this one certainly does. So all the ETFs are looking for a turn right now. Bitcoin, if you're into Bitcoin, another little delicious return. Look at that, right back up into some nice clean price action, and then big hammer down. We haven't taken out anything significant on this side. Nothing significant on that side, so that's not, even though you see it trade above it, it doesn't take out a significant low. So look for it just to return back into the range. And if you miss this, look for the breaker. So your breaker's right here. You don't get the breaker either. It runs all the way through you. Runs through all of it. You don't get an opportunity to get on there. It's out of town. But the reversal's up high. See this one here? Body trades above it right there. You get back into it, and New York open. You're into it for a long. Takes a while to get back up into this one. Discount array, premium array. You're right up inside it. Close it out, and you wait. Wait for a reversal. Tell you, Bitcoin's a fun one to look at. Let's get back over here. Ooh, look at that. It finally did reverse on us. And we were calling for this. We say, look at this. We have a body of trading above it. Stop losses here. We traded above it one more time. You don't even get a chance to get in it. So if you do get a body that trades above the breaker, closes above the breaker, trade off the breaker. And whilst I was chatting away there, we missed it. And look at that, right to the rejection block. And look at that snap off the rejection block. Crazy fun. So now we're looking for a return back up into that fair value gap we mentioned earlier. And Carver, good morning. Tommy, good morning. Russell, Paul, hello, hello. Yakov, good morning. Tok, good morning. Fernando, Lobo, and Paul. I'm in at 17,704. Good for you. Right off the breaker, sir. Well done. Well done. Upside objective. I love it. Well done, Paul. Hi, Anthony. Welcome. Well, way to go, Paul. You caught that whilst I was yakking over here. Good eye. Off the breaker. Well done. So we're looking for a price to run up in here and look for this reversal pattern to happen up in this area here. If we don't get exactly what it is we're looking for, we won't bother taking it. I love rejection blocks. Pay yourself at rejection blocks. This is all unrealized profit you're losing now if you don't pay yourself at a rejection block. You're up 3.5% so far on your 100,000K top step challenge. Good luck, Anthony. You don't need luck when you know what it is you're looking for. Tell me your setup. Tell me your entry, your exit, your fail safe, where you know it's going to fail. If it breaks a specific point, if it fails at that point, you know you're going to get your stop taken. Keep trading your setup. Don't worry about the money. Just keep trading your setup, my friend, and you'll do well. 3.5% is great. Focus on the setups. Focus on the setups. See how you go from one array to the high array? So you got discount array. If you aim for that array right there and got out right there, you can't go wrong in that one. That's a beautiful discount to premium array. Like array to like array. You'll hear me say that many times. So this candle, see how this one validates this as an order block right here. Then come back up, tapped it, come all the way down, back to a breaker. So your initial, if you break above this high and you come, or break above that high here and you come back in, tap the breaker here and you catch long and you run to there, you come back down, you can reload it again off that breaker if you're confident that we're aiming back up here again. So you get to buffer your trade, so you get to take all that profit, come back, load it on again, and as soon as it comes back up here, you can unload that position one more time. If it comes back here, or at least a portion of it, if it comes back here, load it on again, like you're just starting your trade over and over again. You want to see it push right through these now. Nice. Look for a run up into that fair value gap above you. Body trades above this, back to the breaker. Now you want that to, now you're back into the breaker. You want to see that start to really kick off there now and start to run up into that breaker. Now we're up in the premium. That's why, you know, I'm not entering in this. We're right near the premium of the if this takes off from here, you'd be like, ah, that was a beautiful opportunity. See how you see that breaker's been hit nicely? Are you looking for upside? You're looking for a run back in here. And if Paul, you're still on this, good for you, man. You got a nice little run going now. $704, I think you said you were in. $704, yeah. 60 handles. It's really nice. Up in here, I'll get you. That'll put you almost at 90 handles if that gets all the way into your objective. That's a good run, Paul. Good for you, buddy. Well done. Nice catch. Wow, on MT5, that did not give you a rejection block at all. It was just short of that. It did give you the breaker, though. Ooh, just barely gave you the breaker. Morning, Doc. My bias was always taking trades after that weekly swing low was taken. I've been taking small buys at key liquidity levels at a particular time. I mostly use the 1 hour, 15-minute liquidity levels. Excellent. Good for you, Anthony. Paul, you're out. Okay, fair enough. Yeah, these swings can be quite dramatic, hey? That's optimal trade entry there, I bet. That's right down to a discount or a 62% inside that range. And now we're just getting into it here. I want to see a big bold candle get up there, though. Create a nice little fair value gap. Yeah, I want this to end up being a breaker. Give me a small one. Then a big bold candle up there, creating a fair value gap. A peak candle, reverse, big bold candle. So you almost have to picture what this is going to look like. Back to the breaker again. This is good. This is a swing. Push, push, push. Good. That's a fair value gap we're looking for. I want to see a little peeker now. Pop up into here. Nice little wiki candle, but don't close it yet. Don't close it yet. Don't make me bring out the carrot. 33 seconds. We want this to stay open. Damn you, Algo. Damn you, Algo. Love you, honey. Have an awesome day. My wife's like an awesome travel buddy. We go traveling. We get along like a house on fire. We really do. We're so good. We can choose whatever we want to go to. We're like, yeah, sure. I'm game. Let's do it. There's never an argument over where the other person wants to go. If you want to go somewhere, we just go. Say, let's do it. We just enjoy hanging out together. That's always so much fun. It's nice to have a partner you can go traveling with, and there's no anger about where you go. There's no arguments. Let's just make it happen. Let's just go. It's great. New York was fun. Don't know if I'd want to live there, but I think I'd like to stay there for a month or so, because I wouldn't mind checking out some of those little quiet, out of the way places that would be fun to eat and to visit for sure. So I was looking for this. I wanted this to stay open here and create this kind of swing point inside that range we're looking for. So I don't want to play off a reprice, rebalance. I want to see something clean. And if we don't get what we want, then we wait. That's all there is to it. So this may still go higher yet. It's April 18th, live stream explains so much. Morning caught a lovely TS on the euro as it traded London's low. Excellent. Virgal, good for you. Let's go through a couple of other ones here and see what we got going on. Consolidation, look at that. Pop up above, nice little cam model 1 entry. You might even have a cam model 2 entry in there if you take that. I'm sure if you took this high to low from here to there and did your equilibrium. Look at that, right on the beezer for a cam 2 model entry. Boom. Nice cam 2. Cam 1, if you took a cam 1 and a cam 2, aiming for your first order block, takes out that order block, swing, upside, inside the range, back to the fair value gap, above you and the breaker. Nice return to fill right there. Trade over. That is a nice cam 1 model entry there. So it's not the reversal that you're looking for, but it's a cam model entry. And those cam models can be found. They're just words that I call them cam model 1, 2, and 3 entries. You'll see them on the channel here under consolidation attack models 1, 2, and 3. They're ICT models, but he just never gave them a word or a name, so I just call them a cam model entry. So the cam model 1, they're not my invention, they're Michael's. Except for cam model 3, I don't think he talks about that one, but doesn't matter. We'll call those Michael's things. It can also be one of those consolidations. We have a displacement candle to the upside, so we have an impulse leg, return to top of the consolidation or inside the consolidation or back into the fair value gap. Bodies will respect that. And then we continue to the upside. We break the mean threshold of this candle, which is the breaker. We take that mean candle threshold out. We come back inside, dip all the way down into the discount range inside here, back to that little fair value gap you see below you. Also, if this is a swing, which I don't consider that a swing, we have this inversion right here. So the body trades above it, comes back to it, and then continues to the upside. You come back in, revisit it one more time to continue further to the upside to go for a premium array inside a larger range. Mishmash. Reversal. Body trades above it right here. Let's just make this bigger so you can see it. Look right here. You see a body close above it. That gives you the direction, the intention. Runs back up, taps it, continues to the upside, and you're looking for obviously this big sucker here, mean threshold, or the consequent encroachment of that, and you're looking for the high of that. You're also looking for a breaker. We run above a little swing point here. You're back into that breaker, reacting off of that, back into this breaker here, taking out this low, trade back into that. Now you're looking for a run back down into a deeper dig into this discount array. If we get through this mean threshold here, look for this to get revisited. So you want to see this breaker hold now. If this stays open, you want to see this candle here hold price and continue back down. If it continues to eat through the mean threshold of that candle and we start to close above it, start looking for higher prices, the potential run up here, because this swing below here is forming right here. So we get a body above that, trading back into this, look for higher prices back into this range here. So for this situation, we have this reversal going. You want to see this really start to get some legs now and either get out of here or not. So it continues to roll over. We don't have a swing above anything here. I'm technically more, based on that little run there, you're bullish for now, but you're bullish all the way into here, and here's your wiggle room. Stop loss goes here. You want to see that stay open, but if it runs all the way back down into here, that would be the line in the sand for me. I wouldn't even wouldn't allow it to even come down into that mean threshold of the breaker here. You want to see that not even come back into that. You want to see it just stay inside this range here with the body of the candles, and then start to push up higher and get outside of this range, because you're consolidating here right now. So not a strong trade, Not something I'd be jumping all over right now. So if that holds there, if you get the body trading above, you don't just hit the rejection block, and it didn't. So you want to see it close above this wick here. Came right up inside that. We're getting a reaction off of that. Too much chop for me. We'll wait for 10 o'clock now. Euro, what are we getting for euro? See this, let me show you this one here. See how we take this low out? You look for this reversal. Body trades above it. You come back inside it here. Continuation on the upside. There's nothing up here. So let her run. And you wait for those reversals to happen. Wait for the breaker to get taken. It comes back to the breaker one more time. See that? Body breaks above it. You come back inside it right there. You go long. And you wait for these things to start getting broken on the downside. So right there would be my out. As soon as that candle closed and came back inside it, I just monitor this. And if it managed to close up above me, I'd still be in this trade. Came back down, you find support at it, continue to the upside. The moment it breaks down below this inversion right here now, trades back inside it, you get out right there. That's how you'd manage that. This one is the lucky one that you would, as soon as it closed below that, you go, okay, as soon as this candle opens, if it doesn't close, start running back up again, I'll close out that trade right there. And it literally opens up. There's no dip down below it at all. See that? And it just starts climbing. So you'd stay in that all the time it's climbing up. And then it closes right at the top. Opens. Dips down. As soon as it starts to dip down again, you close out your trade. Or if it comes back into this range here, because now you've got a continuation to the upside. As soon as it creates this low here, below that fair value gap there, that's the reversal. Then you go, okay, because this is the one you were aiming for right here. It opened, traded back inside, you collect more profits out of it, and you wait for the next one that forms, like right here. Next one forms, you drop below it right there, you open, as soon as it starts to close down, you're out. As soon as it breaks that low and goes below it, that's where I'd be out. The mean threshold of that candle would be my line in the sand. So then you'd be out of that trade. So whatever you took down in here for this entry, you'd be out right there. You wait for the reversal to happen. There's the reversal. We don't get a body trading above this one here. So you get this one trades below it, takes out that breaker. Oh, it's not a breaker, it's a mitigation block. So you trade off the mitigation block, it comes back into it right here. Continuation on the downside. So there's those little finite points that you can kind of work when you have those fair value gaps. So if you're managing this from the back end, so like Tommy, when you're looking at these and you're managing that back end with the fail safe, That's where it gets really tricky. And this is where you really become, I got to make my decisions based on that candle's close and that candle's open. What am I going to do here? Am I going to close it out the moment it dips below that low? If it runs up above it, I'll stay in the trade because that's giving me a little bit more juice, a couple more drops of lemon out of the lemon. And the moment it trades back down, it continues to trade back up. The moment it trades below that low again, you get back out. Whatever way you want to manage that. But anyway, that's how do you use the fail-safe to get you back up there. Ooh, look at this. Nothing gave me anything in there, so you literally have to wait for find a breaker. Body trades below it right here. See that right there? This one here trades back into the breaker right there. Continuation. That's a whole new different setup from what we normally do in terms of the swing. If you see a swing, you catch the swing, and if the candle takes off on you, you usually catch the breaker. If there is no swing, you can still catch the breaker if you're getting a nice firm displacement candle, and you need a body getting below it though. From my eyes, and there's no body there, okay, the body ends up there and you go, okay, that's the validation right there. Off that stop loss goes above your either this high here or above the breaker. For me, that's my fail safe, would go in there. If I lose the mean threshold on the close, then we're coming back up into the higher into the range. Now if you're trading back down to your rejection block, old lows. If you take those out, all the better. This is a breaker right here, a last down close candle before taking these highs out, and you've traded on a full candle all the way through to the rejection block. So look for an optimum trade entry reversal here to continue on the downside. If that makes any sense. Could I read for natural gas? Oh, NG. NG or UNG? This is UNG. Do you just want natural gas? I'll give you natural gas. NG. Futures. It's 10 o'clock. So UNG, see this big gap right here, swing point. That's wherever your eye goes right off the bat, right? So you look for a break below that, because the gaps are the same thing as the fair value gaps, the inversions, whatever you want to look at them. So the body trades below it right here. You don't get an opportunity to get in on it here, so you look for the breaker that sets up this whole run, this whole gap above. So you trade below, you come back up inside the breaker here, continue on the downside. There's a reversal here. Body trades above it right there. You trade back into it here, get long, back into this range again, back into that breaker. Sorry, that big gap you have here. You trade all the way back up inside that gap. Look for a reversal. Here's your reversal. Body trades below it. You trade back up inside it. You get short. Now, if you're buying natural gas as a stock or a future, in this case, it's a futures market. So if you're trading that, it's the same thing. It's the same algorithm. It's the same freaking thing. Okay? Doesn't matter. Your setups are done the same way. Exactly the same way. So if you're in January of this year and you see this run up back into this and you go, great, there's an opportunity for me to get short at this. Do you trust that, or did you want this to all to fill here? Well, your stop loss has to go up above there, and you wait. You get your opportunity in here. If a body closes above it, then you're looking for higher prices. Just stick with your rules. And this is happening on a daily basis. So you're using the same rules you use for a day chart as you do for a 1 minute chart. There's your reversal. You take out these highs here, reversal, body trades below it. So on January 17th, you look for January 18th and you say, if it trades back anywhere inside here, I'm going to start shorting this. If you're trading options, you'd short this in an option as an example. You're shorting it all up inside here, and your stop would be up here. And if this body trades through this on the upside, then you say my failsafe is here, so my option for my stop loss won't get hit because it's violating my rule. My rule is I just want it to trade up inside that, and it does. Now you're selling shorts, and you're aiming for what? You're aiming for consolidation. You're aiming for this reversal down here. So even if you shorted that for 2 days, you're right into that. And if it blows all the way through it on the downside and it closes below it, you go, ooh, that's a good sign. It comes back up all the way inside the range for an optimum trade entry. You continue and you gap down. There's your reversal. Body trades above it right there. You trade back into it right here. Pull your fib tool. Look for your range. You may say, well, it could be running all the way back up into that. Okay, let's say that was your objective. And you see a return back into, so you got in right here. You're watching, and all of a sudden it displaces back down. Then you go, okay, here's my line in the sand. If I trade below that level on a close, which is right here, trades back in, gives you an opportunity to get out of your trade, and you wait. You move to the sidelines and wait for a better setup. So yeah, you would have taken a loss from there to there. Small loss versus the huge gains you've made up here. You're in a consolidation, so move to the sidelines and wait. So there's your natural gas, my friend. Now, do you have the patience to wait for those specific times of years for that, for a day trade? Because that natural gas that you had there, if you capture this at the beginning of the year and you wait until February, you've caught that whole run all the way down. What's the seasonal tendency for that? If you're going to catch a mega trade for the year and you're expecting January, the first week or two of January, to set up a short for you, like a high, an intermittent high, you pull that range that you're in and say, what's an optimum trade entry for that to reach for? Well, if I'm expecting the high and a seasonal tendency to occur in January, and I'm coming back into a range here, I pull my fib tool here and I go, well, anything over 50% is my is money for me. So here's your, you wait, you see it come up to 50 and it literally closes above the 50 and you go, great, where's my 62%? So pull your fib tool here and put on your chart retracement and you go, if 52 is here, I go, what is an optimum trade entry? Oh, you've got this big monster gap back here. If I can trade up into that, I will get my short right off of the 79% retracement. What a great place to get my trade short on. If I'm expecting that time of year to make the high. But let's say you don't. Let's say you don't catch that. You say, okay, well, that I wait for that to happen. So you're patient enough to wait. You wait for it and you go, oh, look at this. This would be a great place to get short then. Oh, that's delicious. If I just get one more candle that trades me below that tomorrow, yes. Now, if we get a nice little retracement back into this candle, I'm shorting this because that's my seasonal tendency for an objective that I was looking for this seasonal tendency for the year. I have clearly showed me where I want to go short now. I'm in that. And now I'm going to catch that for the next seasonal tendency for the low to occur in February. And the moment, and you manage this like this, you wait for the reversal to happen. This doesn't take, oh, it does take out some lows here. It doesn't take out this significant low here. So you wait for it to retrace back into a 50%. So look at the range that you're in here. And all it's doing here is just running back to 50%, just collecting a little bit of discount. Those premium levels again. Algorithm runs right to the 50, comes back down. And then if you're looking for your, that's still in January. So if you're looking for February to make its low, I don't know what the seasonal tendencies are for gas, but if that makes it seasonal low, then you look for this next retracement, this next break in market structure for reverse in direction. So you wait this one here, then you look for, as soon as one takes out that high right there, you're out. So that one there, you're out of your trade short right there. You've caught most of it and you're out there because it's reversing the direction. Then it's reversing the direction again to an order block. It's keys right off the mean threshold of that candle. Runs back up into this range here, back up to that breaker. Hits it, comes back down to this breaker, breaker to breaker trading, there to there, and then back up to that order block again. Now you get back down to this order block. So it's just getting smaller and smaller. Now it has to bust out of here. That's gas for you. See that swing taken out right there? Reversal. Body trades above it right here. You're inside it. You're running back up into a higher. There's no higher one here. So I'm expecting to see this push through here now. $17,770. What are you going, long or short? Good morning, all. Morning, Tristan. Christoph, thanks. You're welcome. And good morning, Derek. Looking for a silver bullet now. So for me, the silver bullet, if you're looking at the discount, Derek's discount range, look for 50% or lower. So this is the guy you're looking for the silver bullet. And it's literally 50 to 62% is sitting right inside that silver bullet. We're short. Yeah, I could say you're short, at least into that silver bullet. We're short out now. Okay. Paul's probably like, God darn it, I should have kept in my short. What was your instinct there? What told you that was going short, Paul? Off of a breaker? Is that what you're looking for? You're catching that 170 off of a breaker, which is fine. You're in a premium of this range and you're looking to get back into the discount of this range. So I wouldn't say that was a bad trade. You've got to be nimble, though, to get back inside here. You've just hit the 50% there. I think that was at least 50%. Or pretty close to 50. Yeah, so we're looking for this little pop down into here. Right there. Well, so I'll go long on that. It's technically should be down here. I don't want to see the mean threshold of this giveaway, but they can come down, tap it, I suppose. Oh, that's not what I'm looking for. Well, that's not what I'm looking for. Watch this here now. See if that closes below that. Well, that totally took me for a spin. See where this 9 seconds closes out right here. I guess that's the turn of the day. They got me. They got me on that one. And we were calling for that for the high of the day too. See, that's what I didn't use my fail safe on that. Look at that. Body traded below it right there. Pop back up, said, look, I'll give you one little tiny chance to get out here because you're wrong. So returning to get back in sync with the market. If this actually trades back up into here. Got all these equal lows here. Paul's like, I knew that was going short. Equal highs on the 1 hour. Looks okay. Get an entry. And daily high taken out. Daily 4 hours. Yep. 2022 model. Maybe 1 minute fair value gap will give us an inversion fair value gap is equilibrium of the current run right back into that breaker is right ideally where I want to spot. Hit it already. I'd like to see that get short right there. I'm going to key off this breaker here. Stop loss will go right above that breaker. I don't want to see this mean threshold give way. Get back in sync with this. We've traded below this swing to run back up into a premium array. If you have a reversal, it's not a significant swing for me though. But I want to see this either way. We've traded back up into this breaker to run above these old highs here, the small little high. You've come back into it. Now I want to see that hold price and continue on the downside. That's just a matter of trying to get back in sync with it, that's all. Yeah, I think it can run up inside this, so I should put my stop loss a little higher. That guy there. Then you look at this and you think, oh, what's an optimum trade entry? That's going to be my line in the sand there. If I start blowing through this, then we're looking for a higher run up into this guy here. And I don't want to stop loss that high. There's the mean threshold. I want to see that snap off of that, start coming back down, turn into a nice blue candle. Now I definitely don't want it to go above there. It's hit it once. I don't need to hit it again. If it hits it again, then I'm out. So I'm expecting that mean threshold to hold now. And I don't want any more of these little whippy candles. Just give me some price action here. Start moving. Got to get out of here soon. It's got to start moving now. We need to put the carrot down here. That's what it is. Give it a little motivation. I don't want to see the body trade above this here. Because then we have this potential swing right here. Again, not past a significant point, and we have these equal lows. So I'm expecting the equal lows to get taken on the downside. I'm just going to leave my stop loss where it is, so that it becomes a zero stress trade, and we'll just wait for it to do its thing. We've worked all inside this fair value gap now. I want to see the body trade below it, trade back up into it, find some support at it, and then roll over and start coming back down. This whole waffling around inside here is not fun. I'll just wait for something else to set up. It's not a clean setup, so stop loss moves to break even, plus whatever it costs for the trade. So now I'm expecting this. If we start running back up in here again, I'm expecting it to run back into a higher range here. So the next entry will possibly be no, I'm gonna wait. That's not taking out a significant high, so these equal lows are being engineered. You see this close above. Let's see where that one closes. What does the carrot mean? The carrot's the motivator. Talk. We realized that the algorithm is a vegetarian. So wherever we put the carrot is where we want the price to come to. And this is usually a good motivator for the algorithm. It's just more of a cartoony thing that we put on just for entertainment, something to look for, expecting it to come up and kiss the carrot. The carrot's our little mascot for our for our trading. Eric, you're looking at a 4-minute candle. Oh, for here, for a short, you mean? That's a perfect fill for you there, Derek. Did you take it? Yes, let's look for ES. From this discount array here, if that closes above, to the premium array up here. So watch to see if this closes above that. gold still mired in the muck. The hourly. Still no bodies trading above that. See how the wicks do the damage? Bodies are still respecting this. We want to see this trade above it if you want to get higher. And we haven't gone into this yet. So just mucking around. Highs taken, reversal, breaker. We don't get the first one, you don't get the second one. You trade through the breaker. You come back up inside the breaker, inside this inversion for the short. This is one of those premium discount. If you trade above the premium, come back into the discount here and then run back up into the premium. It's just a small little hop up right here. Then you got to be prepared to get that short if your overall bias is short. That's a fun one. So reversal comes all the way back down into that reversal. Then you get to trade all the way back up into the one that's above here. Get that short. That would have been a fun, tricky chess move play right there. You got to keep your eyes on those two, premium and discount arrays. And then the trade back, you don't even get the trade back into the mitigation block, but you do get a breaker right here. Trade below it, right? Oh no, you don't. You don't get it. It takes off on you. Look at 1 minute. I'll look for 1 minute gold to see if it gives us anything significance here. Body breaks above it right here. Tap in, get your high. Tap in for the run. You look for a reversal. Body trades below it. You come back up inside it. These are the ones that would get me out. Unless you're putting that as your wiggle room. Reversal. Looking for the breaker that takes out the hole. You come back inside the breaker. You have a reversal here. So don't take the breaker. You have a reversal. You get inside the reversal. Perfect reversal right there. Perfect entry. Run back up into mean threshold of this order block here. Wait for reversal. Body trades below it. You don't get a chance to get in on it. Breaker. You don't even get a chance to get in on the breaker before it takes the low. So you wait for a reversal. Body trades above it. Trade back into it. You get long. Back up into breaker. Order block. Or if you just aim for that discount array, premium array. You come all the way up into it there. You get out. Swing. Body trades below it. Trades back into it. You're short into order blocks. Mean threshold. Rejection block. Reversal. Body trades above it. You get back into it. Ran up to the breaker. That's gold on a 1 minute. What's oil up to? See this? It becomes an inversion. When the body trades above it, you find support at it to go higher, aiming for higher PD arrays. And here we are back in the muck. Still nothing here. I don't see anything here really. Dixie, what's Dixie doing? Still don't have a body above here. There's nothing up here. Still bearish. They just came back into this order block breaker. Woohoo, we're hauling some ducats here, boy. 70 cents, 76 cents. Woohoo, aiming for our all-time high up there. So we caught a nice trade here. On that, I think it was daily candle we're trading this, aren't we? Yeah, we're catching this. We wanted the high, we wanted the low, and we were willing to take wherever it was sitting at the time because it was in an opportune, I think it was the mini threshold we were trying to capture there. No, we just caught whatever was trading at the time because it was in that range. So we'll take the first one there, second one there, and see if we get a run up into our $10 or $17 range. So we're trying to leave these on for a long trade now. This one's going to be over several days. Now, usually with euro, if I go, let me just check here on this. Symbols, Forex, euro. The shorts pay you for holding them overnight. Longs don't pay you, they charge you for a long. So they'll ding us on longs going. So we'll lose money on it and it's a Wednesday, so they'll charge us triple today. I don't know if that's the same thing for TradingView, but I know MT5 will definitely do that to you. Take it easy, Tommy. Seems to be accumulating though. Hard to estimate. You want to see this, just a big displacement. You don't want to see a wick run like that. I was still hoping we would get ourselves a decent reversal here. Ridiculous, the breaker though. Come back inside the breaker. 39 people dedicated to reading price action. The rest are just moving to the sidelines. Gotta work, I guess. Partial profits at the equal lows, 2 micros remaining. The final destination 17,692. I believe you will get that today, Derek. I believe you will get that. Job to be in there today, my friend. Some job to be in there. This is your CAM 1 and 2 model entries right here. Consolidation. Breaks above. CAM model 1 entry. Then runs all the way up into the breaker. Comes all the way back into our CAM model 2 entry. And then takes off. CAM model 1 and 2 entries furlong above these highs. Gets you that. See what these guys are doing today. So they ran all the way up into that fair value gap we mentioned earlier. See how this reversal is happening here now. So you're looking for more downside inside this range. Discount array here. Right to the mean threshold of that fair value gap inversion. Well, so what's the Dixie up to then? So run back up into the mean threshold of that candle. Now we want to see if this breaks this candle's high and closes in the next 20 minutes or next 15, 4 minutes. Then look for this to continuation to the upside here. Watch that in the next couple of minutes, see if we close above this 15-minute fair value gap. should put some 15-minute downward pressure right here. Body trades below it right there. You see that? Trade back up into it perfectly right there. Short. Rejection block. This means we should get more downside on euro. We're going to let that sit anyway because we're in that for the long haul. So this is one of those ones you look at and you say, well, I know this is probably going to come down now. So do I stay in a trade on a lower time frame when the higher time frame you know is going to come down through the money that you're about to make and you're about to give that away? I'm giving away my 7 cents now. It's going to run below me. Now you say, well, do I get out and get myself into a better position lower? Which would make more sense. We'll see where that closes in the next 15 minutes. Does this breaker's mean threshold hold price? You're really between this candle here and this inversion right here. And the fact that you're eating that all up with one candle. One more minute. And see how we're not reacting off of it? We're just tapping it and we're eating into it. We're not just hitting it, snap, and then pulling off of it. Derek's going to get his 92, 692. It's a slow, insidious run there, Derek. I don't think you might get it. Could you please explain what you mean by take the breaker? I understand that it provides an entry opportunity, but sometimes prices pass the breaker and take liquidity and then reverse instead. Yeah, if you're in a run where you're expecting a turn to happen and your bias is short and it runs the breaker, it runs right through the breaker on the downside, you just go, oh, that's, if it runs all the way through the mean threshold of that breaker, then you expect if the body gets below it, usually comes back to it, then the breaker can be traded to from two different sides, the top and from the bottom. The mean threshold is the giveaway or the line in the sand. If you trade through it and close below it, then you use the reversal of it to get short, because that tells you that it's got intent to go in the opposite direction. For example, here's your breaker. See how it traded to it right here? Then the wick all the way through that, that gives you an indication that, oh, that doesn't look good. Usually it just comes back, taps the high, the low, or the mean threshold. You don't want to see a big wick eaten all the way into the bottom of it already. Comes back up, and then you see a body trade all the way through it. Well, it doesn't trade all the way through it here. It's still on it. Then we have a body trade below it right here. Then you see that trade back into it, this whole candle here, and then it gets short. So that gives it away right there. When you get the body, for me, when the body trades below it, you trade back into it. And we're expecting a reversal to happen at that time of the day. You expect that breaker to give way. And it does. And when it does with a body and you trade back to it, that's your short. And then you run for the next breaker here. And then you see that give way. But the whole body doesn't trade below it. It just comes back into an optimum trade entry to get short. And it's working it again work, and then it finally blows through the whole bottoms. This is engineered liquidity below you. Comes back up into 50% or more of that range. Derek found that on a 4-minute chart. That's a perfect fill of a fair value gap on a 4-minute chart. Then it finally broke down below it with a body right here. You trade back up into it right there. Fill of the fair value gap below you here. And you're hoping that it continues. You're at the rejection block 92. So Derek should be out by now. That's a 90. He wanted to get 92. So he's done. He's good. So you look at the rejection, you look at these breakers, and you're looking for support there. If they provide you a level of support, look for a return back into the range that you're in. And look how these breakers will provide a level of support in one direction versus another direction. So you really have to stare at the candles and watch the candles on a minute-by-minute basis, and then say, okay, that's my breaker. What's it doing right now? Is it getting eaten through? Is it getting blasted through? Yeah, that's not a good sign. See, the mean threshold was taken out there, and Derek has pointed this out several times in the past, that just because the mean threshold is taken out doesn't mean to say there you're going to get the whole bottom taken out. You could get this return all the way back into optimum trade entry. When the bodies take through there, though, when you get a body close all the way through the candle and close through the bottom of it, then for me it becomes, I'm not worried about running all the way back up into a range. I tend to look at that as that's the line in the sand to go short. Oops, I don't want a snooze button there. That explains top instead of just reversing at the breaker. Any tips on this? Is it because I'm reading draw on liquidity wrong? Yeah, a lot of people just tend to go for they say, well, the liquidity is all sitting. You'll see Michael put these long lines down here saying the liquidity sitting here. I just look at the range. You'll see me, I'm an internal range liquidity kind of guy, and I like to look for reversals. I like to look for breakers, and I like to change inside that internal range. Michael likes to put the liquidity is sitting down here. That's the drawn liquidity. You just got to say, when is it going to get there? And just because that breaker is taken, you can't automatically assume that you're going to run on that liquidity until you get a body break below it. Then you can say, no, that's for my area of liquidity that I'm looking for, or higher time frame liquidity. Just stay focused on the arrays right now and try and understand the range that you're in. What arrays are you aiming for? If you kind of just watch minute by minute candles and say, here's the range I'm in. So if you say, well, if the liquidity is always above the highs and the lows, then you miss opportunities inside this range for an optimum trade entry. And you go, well, liquidity inside here, if I was trading this on a daily chart, you'd say, well, where's the liquidity? Well, it's resting above these old highs, or it's resting above this high, or it's resting up in here. The liquidity is a relative term, I think, depending on the range you're in. So if you're looking for further downside prices, you say, well, my liquidity is sitting here. Okay, well, what's the best opportunity for me to get get maximum profits for that? Well, I don't want to take it here. I want to wait for it to run all the way back up into a premium level so I can get a run on that liquidity. And the hints are when you start breaking breakers to the downside. And when you trade through them like that, for me, that's an indication that, all right, if this does retrace back in here, look for an opportunity to get short now, because now you're engineering liquidity down here. And obviously there's more liquidity resting below the market. But there's also these fair value gaps you want to aim for inside a range. So these are liquidity pools for me, not just old highs. And I know Michael loves putting these lines above old highs, and he's right. That's where they invariably go. But I trade the internal range, so I'm like multiple scalp before you run for that high. I've got to learn to try and trust that that high is where I'm actually aiming for, and I've got to prepare for this. You know, if I was in short here and I was aiming for here and it ran all the way down, and then this is what freaks me out, is when you get these runs back up and you got to be prepared to leave your stop loss sitting up there, and this is all unrealized profit. That drives me nuts. I think I could have grabbed that profit off that thing and then captured back in here again for another run at it. But Michael, he doesn't mind letting it go there, come all the way back up, and then do all this stuff before he finally gets his liquidity pool. And he doesn't mind waiting for an hour or two before it finally gets there. And that's discipline, that's dedication, that's a level of understanding and trust on his algorithm that I don't have on mine yet, which I'm not afraid to admit. That's why I like to I'm trying to compound my money as quick as I can, as much as I can inside a range. Nails are gone. You got the money. If you went for the 9 a.m. wick tail, you didn't get filled. Well, I'm heading to the bank. Darren motivated me to take profits at the rejection blocks, not the highs or the lows. So many closed trades with that technique. I call it meditative. Take profit, reduces stress, increases calm. Good for you, man. Well, I'm glad you got your profit. That was a nice perfect entry on that 4-minute candle too. Like, look at this 4-minute chart. Derek got a really nice trade here. See this fair value gap he was looking for? It traded right up, give him a perfect fill, and get short for rejection block. Old lows, breaker, reversal. So what trade here? Let's see what happens here. You're just tapping into it now. I want to see this get blasted through now. So here's your breaker, talk. See how it cleans this all out in here? Well, I guess there's a swing there, but it does take out that one there. So yeah, we'll look at this one here and see how it's come back inside this inversion and this breaker, and see how it's bounced off the mean threshold there. That's what you typically want to see. Now it's going to bounce off of this breaker, that last down close candle that takes out all of this. If we get a run up into here, right now we're just tapping the lows. So there's the run up into that one. See how it reacts off of it? It's that snap off of that there. So now you're between this guy here and this guy here. So breaker to breaker, see, two senior arrays. Who's going to win? I don't know who's going to win. What's the bias? This guy's going to lose. Liquidity sitting down below here. So you got that whole range. So if you're 1, 2, 3, that's a 3-minute breaker right there for that run up. So you can allow that to come all the way up into here. This is all reprice, rebalance here. Now you want to see that react off of here and start eating through this one more time. If it doesn't and it starts to push back up, then I want to see it get above that breaker, or above that 3-minute breaker, get on top of it and start climbing higher. But for me, I like to see this start coming back into here now. So this could be the reversal that we're looking for the next couple of days to get back into that range to go long into May. Doo, 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 doo. Oh, your entry was the consequent encroachment. Okay. Thank you so much for your explanations. They help so much. Oh, you're very welcome. That's what you call a sniper entry, Derek. Yes, indeed. Actual entry was like consequent encroachment of that 17,744 something. Took a nice sell at 17,719. Nice 23K, 2,300K for the day. Enjoy the week, folks. Nice one, Jonas. Good for you. I would like to see this go short right here off that guy. I want to see this give way now. I want to head back into here. Oh yeah, damn, 11 o'clock again. This is gonna piss me off now. I just entered in off that breaker. We could get a 75% retracement of this range now. Over 50 to 65% retracement. Look for that of this range here now. Breaker to breaker. It could be an optimum trade entry here. So this is going to be one of those fun ones. Does this hold here and here? And do we expect that reversal to happen at 11 o'clock? You get this reversal back into the range you created between 9:30's open and 11 o'clock. But we have to blow through this breaker for that to happen. If we've got continuous weakness, we should see that breaker hold. This one let go and continue down without a 25 or 50% retracement. Let's see what happens. See this start getting eaten up now? Get that right to the top of that breaker. You want to see this guy start getting chewed up. See, I want to see a body close right below here, and then push right through and have a full close. So this is what we were talking about earlier, Talk. That breaker there, you want to see a body close through it like this. Push. See how we're getting a wick eaten right through it? You want to see a good body close below that low right there. Not just a body closing into it and above the rejection block. You want to see this push all the way through. Big bold candle down now. Then we can come back into this, find some more support at it to go lower. It's fighting to hold us back now, but we're drilling down into it. So you may see this several smack on the way down, drill through it, or just pound through it like this. Come to the carrot, my friend. Come to the carrot. Come get you some carrot. See how the body closes below it right there? We come back, tippy tappy. You want to see that keep coming down now. Drive it on home. Turn it into a zero stress trade now. So hopefully that helps you, Talk. So you get a bit of a more understanding about breakers and how they can provide us a level of support or resistance, or when they're given or broken through, what kind of response you'll get off of them, and what kind of expectations you have once they're broken. Hypnotize it. NQ, you're getting sleepy, wanting to lay down, go down further to a deep sleep. Yes, exactly. See it broke above it here now. So you're expecting to see that come back into here, or if that breaker gets taken, like we just did TikTok or Talk, when that breaker happens and comes back into it, look for higher prices, or at least higher prices off of this inversion here at the 15-minute. See how we're looking at that? That's what you're looking for to go higher, which will put more downward pressure on all of these charts, by the way. Oops. Took a short from 17,771. 17,711. And that's just because you took it off of these old lows here. So as soon as it broke down, came back inside them, you found support at that or inside this? Like, what was your rationale for this? Was it the inversion that you saw break through and then came back inside it to get short? Was it the old lows that you were aiming for? What specifically was your entry there, Tok? I'm just interested to know what you were looking for. Took a short from there. Good for you. I have a question. Do you have any mentorship or accept any students? Me? I would, any program that you offer right away. Look, I am not here to sell anything, my friends. I'm here to give it away for free. Michael gives it away for free. I'm here to just help you get there, my friend. Just help you to get there. If you succeed, that's all that makes me happy. I'm not charging anything. So I have no mentorships. This is my mentorship. Jump in, have fun, and we'll practice the stuff together. That's all there is to it. You can't get any better than free, my friend. So no mentorships. No mentorships. Just keep turning up. Tell your friends. It's all free. Yes, there's some things in life that are free and people are genuine and they genuinely want to help you. And that's all I want to do. That's all Derek wants to do. He wants to make some money as well on the side, but he wants to help people as well. So, and you'll see lots of people in our Telegram are there to help as well. So no mentorship, my friend. Just come on out. I still have one micro from 1770. Nice. Micro playing as well. Good for you, buddy. Well done, Jonas. Throw in the kitchen sink. Myrtle, we're moving down. That's right. Yeehaw! We're moving down. I want this breaker to hold now. So you can come back and tap him a few more times. Give him a couple of kisses on the way down. I want to see that hold. So I'm going to leave my stop loss up here because I got to learn to leave it on and stop messing with it. What a beautiful entry. Looking, we just wish we had a nice little sexy entry there, but we didn't. And what we did get though is a, oh, I'm supposed to be on the 1 minute. There we go. That looks better. Would this little breaker here, I should have watched the breaker. We could be in these really long runs here from 771, which is what I think Jonas was in, 17719. Oh, he's back down here, 7719. He's over here somewhere. But that breaker right there, when it ran through it, came back to it. Ooh, baby, are you willing to stay on it? That would have been the one that threw me off, that retracement. So when you got to leave your stop loss there and trust that if that's the return that you're looking for, you want that to hold price now. Dang. Got to start trusting that stuff more often. So I like this because at 11 o'clock, we're expecting that reversal back into 50 to 62% of the range. If we don't and it continues down, that's a positive sign for more downside. So looking for those two big sticks there, the downside push. Ideally, I'd love to get back in here. We may just see inside here though. So tomorrow, this may be the start of the run down into tomorrow, Thursday. And if we close below, and if Thursday closes below here, ooh, we're still going down. I still see that as bullish until we get above. That's the linchpin right there for me. If we trade below it on a close, come back to it, we're looking for more downside. And these little fair value gaps that are sitting down here on the daily are in play again, right? Because this is just the mean threshold of that order block right there. See that? And we've had a nice little reaction off of that. So if we, this was just to come back into a breaker, which is right here. See that breaker? Run up above these old highs here and that old high right there. We came all the way back inside that breaker's body, hit it nicely, reacted off of it. Now this could be a continuation on the downside and everybody's expecting that to run all the way back up again and doesn't do it. But that could be the April low. I'm expecting that to be the April low, so I'm expecting this to be the reversal we're looking for. So you're pretty much going from premium array to discount array way down here. So we'll see how that pans out for the day. I believe the bearish order block will hold in the 1 minute chart. I believed the bearish order block could hold. Oh, back there on the 1 minute chart. Oh yeah, you got in at 7-11, didn't you? Oh, okay. So this breaker here is also a great opportunity. So you traded below it, body trades below it. You come back into it. Remember we were talking about this breaker right here. You traded back into it right here. Nice opportunity to get short. There's a 7-11 area that you're looking at. Yeah, I totally get that one. I was looking at the 4 minute chart. That's why I was kind of thrown off. But yeah, that totally makes sense off of here. So good call. Definitely good call. Can you smell what the crop is cooking? Now my temptation is just smash this down and start. It's now looking for a silver bullet on the 11 o'clock. I'm just going to leave it alone. I'm just going to let this run now. See if I can just leave it alone. Victor, done for the AM session. We'll move to the side now. Good for you, Victor. Good for you, my friend. Good for you. Dean, applause, applause. Then you'll have me here every day. Well, I'm glad you're here, Talk. Glad we can help. Fernando. Fernando's a good mentor, the best. Well, I don't know about the best mentor, but thank you, Fernando. Fernando, thank you. Derek, NQ 1 hour has a volume imbalance we are in right now. Not sure how it will handle that. Let's just have a look, Mr. Derek. Let us have a look here. Let us have a look for this. Ah, yes. So, I've got nothing in a reversal for the hourly here, hey? So we could just be running into this order block. You want to see this mean threshold and the hourly candle give way. We also have this 1 hour fair value gap right here. We have price gapping up. So you want to see it get below this gap here. For me, I want to see it close below this piece on the hour and come back inside it, find some support at that, and then start drilling through this guy. The important thing is right here, inside that mean threshold. From here to here. That little piece right there. I want to see that. That is what I want to see right there. Continuation. Eat through this puppy right there. What? How much time we got? Oh, we still got another 20 minutes. This would be great if this just keeps eating and going and going and going through this and doesn't even bother coming back to that. Just gets through the mean threshold of this candle. You want to see it close below that. And again, the body, and then start using this as a market maker sell model, getting into this candle, coming back in, find support at it, get down below this one, find some support at it, and keep pushing down into this breaker that we have sitting right here. But you're right, Derek. That one is definitely yeah, you want to see it get below this, hey? Yeah, I see what you're talking about right now. Right there. Oops. Right there. In the 1 hour. Good eye, Derek. Good eye, buddy. Is this a weekly one again? We back into a weekly? Yes, we are. Back to that weekly inversion fair value gap again. I don't want to see it bounce off of that and go back up. I want to see it just start drilling through that. Give them some carrot. More carrots. Mm-hmm. 10:05 to 10:10, all those wicks were hitting the premium 78% level. I missed that sign screaming in my face. Yeah, that happens, Tristan. That happens, buddy. Your take profit is my 5 months salary. Holy cow. Yeah, that's crazy, hey? Now I want to start protecting this because this is I know I shouldn't. I should leave that alone, but I'm going to say make some money. 5 month salary. Wow, that really impacts me. That really does. 3,800 bucks. That's a 5 month salary for somebody. And we're going to try and make that in a day or so. But even this, if you're locking this in, that's huge salary for some people. And that's just what, 15, 20 minutes? We've just done that one. That's massive. That's massive. So I'm so humbled by people bringing that to my attention, because sometimes you look at that and you go, okay, 400 bucks. I paid 300 and some odd dollars just to go to the top of the Empire State Building and look around the other day. 385 bucks for me and my wife. Insane. Highway robbery. And you think about, for lap, 385 bucks. That's like weeks worth of work for him or her. That's crazy. So I am humbled by those moments. Kind of puts it in check. Let's say when you make that kind of cash, I can imagine that would be a dream for some people. Thanks for the free streaming and explanation because I got hard time with ICT concepts. Yeah, you have to study, you have to keep studying his stuff and come here and we'll help you try and apply it. I'm just doing a 1 minute, a minute by minute chart. I know it can be frustrating for some people, but I do like to just what's happening on the 1 minute chart. I don't care about fundamentals. I don't care about whatever else is going on in the world. I only look at what's going on a 1 minute chart, and I try to show you where it's going and what's it's doing on a 1 minute chart. And your objectives can be on higher time frame charts. I've got no problem with that whatsoever. But all the time we're watching it and studying it on a 1 minute chart, you'll understand all your other charts, and I think it'll just make your trading that much better and crisper and more sharp because you know what it is you're looking for, where the fail safe is going to be, where you're going to keep your money or you're not going to keep your money. When you see a certain point break, that's the point where you say it's changing directions. It may not break market structure, but it's changing directions for the short term. Breaking market structure with a change in direction, well, that's even stronger still, right? So it's bouncing off of that. Now, if I had like 5 handles on that, I'd take a portion off there. Right at that weekly fair value gap, take a piece off there. But we're in this for the long haul now. We'll see if we can get this pan out for the rest of the day. The fear is it's going to come back in here and take me out here. That little pocket of stuff makes me worried. So I want to get below. I want to see some fair value gap get in here so I can manage this with a fail safe on the back end, because I'm about to lose more than half of that trade because that was $1,100. If it comes back to there, you're losing more than half of that. So there's lots of little points here, but there's that pocket of liquidity above you. That's where you go, all I want to do is just leave my stop loss sitting right here then. And if it comes back and takes me out, you got to be okay with that and say, well, you just threw away $1,000. I don't want to see this mean threshold give way here. See this one? Ran below this low. No, get out of there. I do not want to see you tap that again. Snap off of that and get going. Come on down. I'm going to put that right there. This is my damn interference when I start messing around with my trades. I don't want to lose that mean threshold again now. This one's been traded to multiple times. This mean threshold hasn't been traded. There you go. It took me out. So if we come back up in here, I'll load this on again. You see how that mean threshold? Ugh, it literally closed right on it. Now watch it just trade off on me here. And this is right before. This is 11:30, 25:27. This could be a reversal here. I'll wait and see. I like this breaker here. Let's look up here. Let's take this one here. 62, 70%. Bottom of the hour. Yes, I know. This could be the rollover. Come up to 50%. Take this little stuff out here. Come to 62. A little roll up into here. This is that thing Derek was mentioning earlier about the 1 hour, right? We've wicked all the way down to the top of the weekly fair value gap, and now we're getting a snap off of that, like crazy snap off that. Which tells me what will we run back to? This breaker right here, right near 50%, 62% is up in here. So look for that to run back up into here. We're into that guy. 70% puts us right on the body. That would be the optimum trade entry for that little short. Let's go back to the 1 minute here. There's 50%. Silver bullet entry. A late silver bullet from 11 o'clock. Run back up into here. I like that range here now. See, that's that. The fear was here. And then the logic was if we break that mean threshold of that candle, then chances are we're going to run back up into this range here. So we're already over 50% now. And that's really all it needs to continue on the downside. But you look at that, so you say, what is sitting in here? What PD array is sitting in here that would support a run back up into an optimum trade entry to get it short? Well, you've got that little pocket sitting right there. And you've got this old equal lows sitting right here, 62%. You got the fill, you got that one above you here. So which one do you want to aim for? You have a breaker sitting right here inside that range. If you pull the higher range from here, 50% puts you right on that. If you pull the higher range, the whole range in here, puts you right in the middle of the breaker. You pull this one right here, put you at the breaker. So pulling this range here off of the one that initiated the run after the breaker was taken, like when we traded back to this breaker right here, that seems like a more logical one for me. But we'll see, I suppose. This is the range you have to stay in right now until we start breaking up and out. Question, as you said when a minute ago you reviewed the weekly chart, there is a breaker of many weeks ago that you believe will hold. However, if you take the low made on 07 to the high, if you take the low made on April 19th to the high for the weekly candle, sorry, let me have a look at this weekly candle you speak of. Weekly. So here's the fair value gap. On the weekly chart. Oh, it's April. What one are you looking for? This, are you looking at this candle here running that old high out? Are you looking for this inversion? This little imbalance? You said the April 10th one? January, February, April 11th. For the weekly, there is no April 11th, there's 8th. Or the 19th to the high. Yeah, I don't know the 19th one. It's a day candle, not a week candle. $62%. I'm going to go short there again. I trust at 62%. Question is, you made a for price has not reached the 50% level. Does that mean that there is no need for price to rebalance and it may go down if the breaker holds? I believe I'm wondering about the hierarchy here, because between rebalancing price and the power of the breaker. I was referring to the volume imbalance from the end of the market Tuesday to open Tuesday evening, day opening gap, I guess it calls it, $700 a month. I wasn't on the markets this morning, but turtle soup with an SMT is one of my favorites. Tim, if you go in there and throw me your throw a chart on that Telegram channel and show me your turtle soup with a SMT setup, I'd love to see that. Just put a picture up there as an example, just so I get an idea of what it is you're talking about. Looking to see what does with the lower 15-minute bearish volume imbalance combo with the Mountain Dew, please. You make take the 15-minute breaker maybe. That's because we're going to do opening gap 620. I'm just curious if you are using prop firms or your own money. Prop firm. I trade my own money. Others do prop firms. Oh, I messed up. I meant the daily. Sorry. Price runs. ICT likes to use the bodies for the fib instead. Yeah. Yeah, he likes to use bodies. I'll leave this in here for the rest of the day. See, this is where you don't want this body trading above this on a 5-minute chart. Coming back into it. I didn't see this one here. Yeah, I see how the body traded above it. So I'm on the wrong side of this. So I'll pull this to here. I'm going to try and use this to try and get myself out of this trade. I'm just chasing this down with my stop loss now. It's chasing it down into, I'm seeing that this is the reversal to go higher. So that should take me out now. Oh, I see that push through into here. And I just start trailing my stop loss behind it here. That takes me out. So I'm expecting that to go higher. That's how you kind of cut your loss. The 1 minute did not trade above there though, but the 5-minute did. So now you want to see, does the 5-minute trade below there on a close? I'm going to move to the sideline and wait on this one. This is that classic reversal that gets me and throws me off the trade. I look at all this unrealized profit and I go, oh, do I really want to give up all that just for the sake of running back up to this fair value gap? So far, it's totally coming back into this order block, equal lows. Bodies are respecting that. Now, if this rolls over and comes back down, get a swing, reversal, breaker. got me. That got me. I was calling this, but chickened out, got thrown off. 5 minute. Didn't keep watching this. The rule is if it breaks that, see how there's nothing in here? So it didn't break that on a close. So we're further downside. So now you get back on the horse. You wait for it to trade back into this. Is this a close? What is this? A down close candle or an up close candle? 67.5 and open 67. Oh, it is a down close candle. Oh, that's a breaker right there. Crap, look at that, right to it. And I didn't get it. Sugar, sugar, sugar. That's how you get back on it. I didn't see it. I should have spread that out a bit more. Make it look blue. It is a blue candle. Look at that, body trades below it. Come back, tap it real quick, and off to the races you go. You got me. Gonna get back on side with that right there. So I'll wait for this one to close below here. Come back, grab this one, then get short off that. Little bugger got me. See, I panicked. I went to a different chart. I was trading on a 1 minute chart, then traded on a 5 minute chart. Made the mistake of looking at this instead of staying on the 1 minute chart because that's what I'm trading on. Got a journal entry that. Look at that. Body did not break that high. Damn. Follow the rules, people. Follow the rules. Ran back, shook me up. Dang nabbit. Good. Want this to close here. 3, 2, 1. Open up. Come back up here. This is when you kick yourself, say. You guys got to witness a good example of where I've been beat up so many times in the past. That's my fear factor. The loss of unrealized funds overwhelmed me. And I looked over here at the 5 minute, got suckered in, started second guessing myself instead of sticking to my rules, which I'm trying to show you guys over and over again. Body does not break that high, that reversal. I got suckered on the 5 minute. See that? The 5 minute just broke that high. This is where we try to get back in sync with it now. At least my live chart, my live one's still on. I got out of this, but I didn't touch my live account because I didn't even look over at my live account. I forgot about my live. So my live account actually is still in this from way up here, but it's only because I just forgot and I looked over, I was like, oh crap, I'm still in my live account. Guess it's kind of a good thing. So that's a good thing. Well, I guess that's the one that counts. Okay, well. Looking to get back in sync with the markets again off that breaker. I trade my own money, I messed up. I meant the daily, sorry. Do you play inversion fair value gap? Do I play inversion fair value gaps? I love inversion fair value gaps. Absolutely, I play them. Absolutement, I do. Now, this is where you start to second guess yourself. You start looking at this and you go, okay, here's a range. I've got one here, one here, one here. So I got discount, equilibrium, premium arrays above me. If I lose the mean threshold of this candle on the upside, it tells me that I'm coming back into a premium of this range to get short. So in order, you can't just say, okay, well, there's your swing point right there. I'm going to go long. If you do, then you have to say, I'm going long inside this range, back to that little guy right there. Or back to the breaker again. So watch that. So I want to see that snap off of here and start coming back down. If it doesn't and starts to chew through this, I do not want to see that come back and revisit that. Now it's touched it. I don't want to see it come back there. If it starts to come back up, I'll close it out. I want to see this snap off of here and just keep coming back down. And I'll turn into a blue candle and start running back down, because that's all you want to see it do is just come back, tap it, and go. That's it. Keep coming. Don't go back up. So fail safe's right there now. That's my fail safe. So I do not want to see it run back in here and turn around, come back up. Otherwise, I'm looking for higher prices. You want to see it get through the mean threshold of this candle here now, because right now we're really between that candle here and this candle here. You want to see this little fair value gap here. It's a reclaimed fair value gap. It's not an inversion. It's just a reclaimed fair value gap. We've come into it once, twice, 3 times. You want to keep coming now. Keep coming. Follow the carrot. Follow the carrot. Now this is, I call this padding now. We have an order block that's been validated right here. That's a bit of padding for me. So we're between this candle and this candle now. I definitely do not want to see that come into there. So that's going to be a break-even trade if it does. That's the padding. See it come back, just tap the body. Now you want to see it leave. I don't want to see it start eating through the mean threshold of that candle. I want to see this mean threshold get eaten away. See how we've tapped the mean threshold of one and we're in the body of the other? So that I want this one to be the stronger one of the two. And I want to see this mean threshold not get tapped, this one get eaten through, like just like that. That's exactly what I'm looking for. Now I want to see it push harder through here, come back. You can tap that one more time. Maybe I'll let you tap the mean threshold. That's fine. But I want to see this just get eaten through. So it starts to show me for strength and weakness, or strength and weakness. So this one I want it to be stronger. This one I want it to be weaker. So I want to see this get hit, that finding support at that, and just keep chewing through this guy over and over and over again. That little fair value gap you see right there, you want to see that provide some support. Little tiny thing, so kind of stretch it out so you get an idea what you're looking at. You don't want to see that go all the way through that to the other side. I don't want to see that. Mean threshold, you want to see that be that line in the sand of that. Snap off of it. Come on. Don't let a body trade above that. That's what I mean by watching the minute by minute candles. You know what you're looking for. You know what you want to see and how it's going to act. And if you see that and you say, this is how I want that to act, and it starts to act that way, you see, now I want to see this get drilled through some more. And I want the candle. I want you to get, I'll even feature some more carrot if you come down here. I don't want to see it come back and revisit this. I want to see it just get out of here because this little sucker here now becomes an important. See how it's pushing to get up there. Now come on down. Get through there. We're just coming up and retapping this order block, the body, and we're eating into the mean threshold of this one. So stronger. Only one array's been hit. This one's been, all three of its arrays been hit on the downside. So if we're battling between the two, you look at, say, which one's the stronger one. I don't see that just go whoosh, and rip through there and take me out, because that's what my fail-safe's for, right? Or my stop loss. My stop loss and my fail-safe are in the same place right now. I don't want to see this get revisited. And yeah, it could run all the way up in there and tap that one more time. I don't want to see that, though. I want to see this. Choo, choo, choo. So when I look at 1 minute candles, that's what I'm looking for. I'm literally watching that candle, and I'm looking at the one above, the one below, and I'm looking at which one's the strongest one, which one do I want to see act the way it should. So you could just say, I'm willing to go into some profits here. I do not want to see this candle lose its mean threshold. And I'll take 85 bucks if I have to. Does that make sense? Uh, 1 minute SMT helped me catch that reversal. We'll confirm it. End of day, I like the 4-hour fair value gap and the 4-hour fair value gap overlap and the top of the 4-hour breaker candle at Fridays. Look for your 930 and out to 11 range and extend it to by 1 standard deviation. Take your, what is it, 930 to 11 range. 930 to 11 range. Once, I don't know how to do that one. I don't know how to work that one, 930. I don't know when you're talking about their TP. But one lunchtime, don't expect the unexpected. Take out some highs and lows. Good to take out the highs earlier in the lunch hour. Suggest we take out lows at the end of the lunch hour. These are gold nuggets. I come here for 100%. Come for the carrot, my friend. Come. See how it's eating away at it? And it just came back up into the mean threshold of that candle. And then you just go, okay, it just tapped it. Now it's chewed right through that, coming for some carrot. Nibble, nibble. Enjoy the carrot, my friends. Enjoy the carrot. Come for some more. I'll give you some more down here. Come on. Come on down now. So now you're back into a zero stress trade. We got a nice perfect entry for a short. And now I want to see this just blasticating all the way down. So where I was off sync here, I had to wait till all the way down in here. Again, unrealized profit for a mistake that I clearly, hopefully you guys see that. You can make a little journal entry on that and say, here's how you mushed that one up, because you were trading on a 1 minute and you switched over and traded on a 5 minute instead of staying on your 1 minute and using your 5 minute time frame as your higher or lower expectations in terms of where you want to go, not switch over from one chart to another chart and start trading on that. You can't do that. and that's why that one failed. So we got some good feedback there. And then it's like, okay, so I was wrong. So how do I get back in sync with the market again? Well, I'd like to see this one trade back to it. Oh, guess I had one opportunity right there. That is to me, it looked like a little bull candle, but it was actually a bear candle. We closed below it, tapped it quick, and then left. So I could have got in off that guy. So you go, okay, now I got to wait for this breaker down here. And that was the opportunity to get in one more time to get short there. So now let's just start locking in some more money here. Because we could get one of these. We're still, don't forget, we're still in the, well, we're coming up for lunch hour right now. So we could start running all the way back up into this range here. So start locking in some profits. Look at this order block here. I want to see that whole price. If I lose the mean threshold on that, that's my fail safe right now. That's my stop loss. Fail safe's here. If I trade above it, come back to it, then I'll get out at a little bit more profit. Otherwise, I'll take the 165. If that makes any sense. There's a small little fair value gap in here. Swing below the low. See that right there? Keep your eyes on that little prize right there. Bodies of respecting it. What are we doing? There's a little imbalance. See how that little imbalance was traded back to right there, and we snapped off of it. That's really nice. I like that. Now keep on coming. Keep on coming. There's the range you're in, and it trades back up into a pretty array, a higher price imbalance right there. Look at that little piece right there, traded back down. We want to see that wick, and then you want to see that little fair value gap. Trade below it, stay below it, close below it, come back, find support. I don't care. Let's just keep running. Now, if we run this low out, we're looking for further downside prices again. Oh, glad my live trade is still on that. These are gold nuggets I come here for. Heavy market will not come back to the gap. Manipulated market will hit the gap before the run. Now I'm going to move to the top of this candle's high. I don't want to see that high get taken again. So we'll just slowly lock it in. Just because we're coming into lunch hour now, and we're coming into that weekly inversion. So where's the middle of that? It's like way down here. So we're not even close to the middle of it yet. All right, so we got another 300. Body's trading above this. See that? Body's trade above it here. We don't get an opportunity to get in here. Look for this breaker here to look for higher range. So if we trade a body above this piece right here, I'm looking to go long inside this range. So watch right here. Came right up inside that breaker. If this continues down now, I should have kept my stop loss above that instead of that one. We go, okay, so now how do you get back in sync with the market again? It's lunch hour, so I'm going to wait because I got a feeling this is going to come back through. Get these little pops like this, get a nice little fair value gap reversal. See how we're getting into my little blue lines again now? So we could just be tapping into this look for your reversal here, because we don't forget we got through one, we got through two, all with one candle. So this could be the reversal we're looking for. So you look for any opportunity now to see a reversal going back up for higher runs into, and leave this wide open here for into May. So seasonal tendency, you just watch. I'd like to get all the way down here, but we'll see. We'll see how this acts. I got to go to the bathroom. On the 1 hour chart, we've already traded through the middle of that candle on the 1 hour chart. Watch the 1 hour. See that? Mean threshold has already been eaten. We've come through the 1 hour. We came back and tapped it like we said we wanted to see it do, and it's tapped it. Now you want to see this continue on the downside. Ah, look, we traded above it again. That's the fear that we're going to run all the way back up into. Yeah, I got a higher time frame reversal. That's a little tiny candle though. Got to close it out. That's the fail safe right there. I didn't take it. I'm getting punished for it now. You got to be quick. The fail safe is right there. Stop loss. Notice I'm not using a stop loss, so I'm getting punished now. I'm giving back all the profits. We have a reversal. Body trades above it, go long. Body trades below it, go short. Body trades above it, go long. Now you want to see it come back into this thing so I can get out. Now it's taking these highs here. If it starts to run up even higher still, I have to now put my stop loss here. And you got to wait. Now I want to see this just rip all the way through this again and give me an opportunity to I'm going to chase this down here like this. I want to see that blow right through here. Leave it right there. That takes me out right there. So small loss. Look at that son of a bitch. That would have broke me even. Okay, so now we're back through this. That gives you an opportunity to get out at the mean threshold of that order block. See that? But that's the what you saw there is me chasing this down, but you don't know how or when it's going to come back and clip you. So I'm looking at this candle here, and I pull down to that, and I go, okay, that's where I want to stay, and it's just enough to pop you up. Then if it starts running here, you go, oh, I want to get down to that. Pop takes you out. Okay. Otherwise, you could just get this reverse hit off of here and then start coming back up again. So now we're below it again. So now this is where you get beat up in a consolidation. So move to the sidelines and wait. Now we're short. That was long, took out the highs, went to rejection block. Now you're looking for the lows. It's come back down, get back in sync with it. So here's the breaker. If it closes below this, trades back into it, you get short again. You see that whole idea about just leave your stop loss alone? This is the trouble you can run into when you keep trying to catch every little reversal. That's the thing I'm working on. I think the high was really suspect as a lunchtime high, and even this one above. Why? Well, see how heavy it is. What is seasonal tendency? Higher equities and lower equities. I was thinking it was sell in May and go away. All in all, the seasonal tendency for NASDAQ is a big dip in April. I'll show you what my seasonal tendency is here. See April? Big dip down in April, and then this huge run up. Dip down, and then the May, you get a run down and one more time in May. So in April, we should get a run back up, and then another dip down in May, and then run all the way up into July, or June, I should say. I think that is June. Yeah. Run all the way down into August and July. Run back up to the September, and then wait to the October low again. Those are the three big ones I'm looking for. Here to here, the August to September, and then October for continuation up. That's the tendencies I'm looking for, just so you know where mine comes from. So there's the mind you, that's a wick. There's only a wick below that low. To me, I want to see bodies get below here. And I'm still not messing with my live account, so I keep forgetting my live account. I'm screwing with this one, and I look over and go, oh yeah, I'm still in that one. That's good. You can carry on down. So all those ETFs I was telling you about, this is where you're coming back into those optimum trade entries, those reversals for the October or the April swing. Those ones I was showing you over here, that's the one you want to be getting in on. And that breaker, I didn't see it. The body broke below it here. See that? Body broke below it. Wick up, get an opportunity to get short. I didn't take that now. But anyway, that was the get back in sync with the market right there. Because here's the swing above and reversal. You don't get an opportunity to get in there. Look for the breaker right there to get short. I'm still looking for all this big hammer down now for the rest of the day. It did come back to the gap. Equals manipulated market. Heavy market signals will fail. It came back to the gap. It came back to that fair value gap right there and then failed. It's taking out the lows now. Mean threshold. See, this is the thing I was telling you about earlier. When we eat through the mean threshold of that candle and we close below it, you trace all the way back up into the mean threshold of it again, run below it. I want to see this one give way the same way as that one gave way. I want to see that come back, find some support at this, blow through the mean threshold on a close, come back inside that, and then continue pushing through to the next fair value gap below us. That's where I'd like to see that continue going. Come for the carrot, my friends. Come for the vegetarian meal. We're up to 669 people. This is awesome. We're doing really, really well, folks. Oh, 670 people have subscribed to our channel. So welcome all 670 of you. I hope you get to learn something here. I hope you're getting some good learnings in here. Good to see price action on a 1 minute chart and it paying off for you. So remember, we are $1,000 when we were here, $1,100 here. That's easily another $1,100 there. That would have been $2,000 in some profit there. We've swept these lows. Mean threshold of this candle. You want to see that give way? We're just coming back to tap this guy again. You want to see that roll over, come back down now. Keep coming. But watch this here. I want to make sure that you don't close above here. find some support of that and start running back up into this range again now that we've taken these lows out. You don't want to be revisiting this again. Manage my live account while I'm doing this one. I don't want to see it get past here, but there is a premium array above us here that could reach for. So you got to give it a little wiggle room in there. Ideally, you want to see it stay off of that 50% of that little range we're just in here and just start coming back down. So we just barely validated this candle. So the mean threshold would be nice to see that hold, but somehow I don't think it's gonna. We're back to rejection again. And potentially running back up into the 62%. And you don't want to see this sucker giveaway here now, because this, you want to see that hold. Otherwise, if that pops up there and starts running, mean threshold is your wiggle room for short. And if that fails, then your stop's going to be taken next, and we're running back up into here. That's okay. Keep playing off the 50. Come on down. You want some carrot? I'll give you some carrot. Come on down. Pop here. Give me some padding here. Yeah, that's it. Give me some padding. No. Come close down below that. Not just a wick. Give me a close there. And we're coming back up here. We validated this candle here. We've chewed into it a bunch of times here now. The mean threshold is holding price. So you're between this candle here and that candle there. This one's been validated, but I want to see a body get below that. Yeah, wick is in. The mean threshold is holding. Give me a body here. And that gives me a bit of padding to go shorter. We're back into this breaker. We're chipping away at this thing. We're drilling away at it multiple times. we may just drill, create some liquidity in here, above and below, run up, take them out, and then slam through the guys on the way back down. Come on. Come on. Delicious fresh carrots for sale. Come get your carrots here. Come on, 2 for 40. There you go, love. Nice, delicious carrots. Come on down, my love. You like a nice, juicy carrot, don't you? So we want a body, get below there. That gives me some padding here now. And we've eaten through that carrot or that candle there. No, 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 no. Don't you give me no wicks. There you go. Give me a body there. Get a little bit of padding here now. Off that breaker. That's getting back in sync with the rundown, but that's the one that froze me off right there. We could just suddenly get a pump up into here. Just when you think it's safe. I don't want to see these wicks. I want to see a body get in here. Get a bit of padding here now with this candle. Order block. You want to see that body hold and just blow right through these wicks now. Start taking out this low. If you look at it, we're in a, look at the quarters. Look at the range you're in here right now. See where we are in, we just hit the discount of the discount portion. So discount. Now we're in the premium discount. There's your array. Mean threshold, snap off of it. No, you don't want to see a big candle sitting there like that, because now you're looking at premium level. See, we ate all through that one candle. Your butt's next. We're heading for here. We're heading for a premium array now. So we've been playing around in this discount range below 50%, and we've been banging around between discount to premium discount to premium discount. We keep jumping back and forth, and that 50% is holding us. So if that's the only thing that we got hope for, see how they're engineering liquidity above this, and they've got a fair value gap sitting right there. Do you think they're going to leave this untouched with that premium array sitting right there, and you banging around inside this discount? I highly doubt it, my friends, unless that's one of those things they're going to come back for in the next day or two. That's just one of those spots that just has these consolidations, cam blast down, cam model 1 entry for continuation on the downside. Yeah, I would not like to see a leg down, run back up. Otherwise, you're looking at projections for 2.5 retracement projections. If we have a leg that comes down, comes back up, takes it out, then I've got to switch my mindset for sure. What is ICT saying today? Don't wait for me to outline it. Study it, he says. And here we go. %62% puts us right on that inversion. Great explanations throughout, sir. Thank you. Oh, you're welcome, MF. I'm going to think as MF as my friend. That's what it is. MF, my friend. Oh, this little breaker's just giving him some attitude. See that? Giving a little slap back. Don't you dare come past here, it says. You can come up here, slap back. You're not going to make it through me. You're not going to make it through me. Lovely. Just keep slapping it back, Mr. Breaker. That's what I'm looking for. But somehow I don't think it's going to happen. I think we're going to get up into here. There we go. Keep your eyes on the prize. You can look right there and right there. Right inside that inversion, clipped it nicely. Now slam it down, man. Come on down. Push hard. Rocket. Rocket. Hit a rocket. Look at that nice little premium array right there. Slam it down now. Come on. I need to charge all through this stuff. Give me some intentions. Give me some. What are your intentions, Mr. Jones? What are your intentions? Is that not a delicious little return for you folks, or what? Now, if you've got on short there, you pay yourself at a rejection block. Nothing wrong with that. Come on down. Come on. Come on. Holy smokes. We're still good. Now those lows have been taken. So from there to there, if you're happy with that, later in the day, we're just in the middle of lunch hour. That little run from there is 1611. Right off that inversion there, it's 611 to here is 30 handles. I don't know about you guys, but 30 handles is a lot of money for some people. It's a lot of money for some people. So 30 handles is quite nice. Look at this run down here, baby. Come on down. We're coming all the way into today's objective. Wow, it's nice that I've kind of forgotten about my live trade, because I would have been out of that many times already. And you see what we could have been in. We were $1,000 to here already. There's 2,000. We're getting close to that objective that we were looking for earlier this morning for $3,000. But anyway, doesn't matter. The live one's still good. Market is probably done until after lunch. Soon as I get up, it will be move. As soon as I get up, it will move 100 handles. Exactly. It's eating carrot now, my friends. It's having a vegetarian lunch. It does like carrots for lunch. What a perfect little entry. Nice. Seen this guy here. Carrots. Delicious carrots for lunch. Old low. Do 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 do. So you look at these as potential, when you see these reversals, potential reversals happening. So we've got confirmation here. We've come back, hit that one. You're looking for, now we've swung below, again, old lows. I want to see this mean threshold. Remember we said we want to see that mean threshold give way, and it's slowly giving away on us, which is good. We want to see that body close below there on the hourly and then start coming back. And I want to see it dig right into here, or just start blasting and start really running, rocking it through here. We're looking for these little reversal patterns that can potentially change direction on us. And then you got to look back at the range you're in and say, is this a range I can trade inside? And that's a premium array too. So if we trade up and through this and start pushing up higher, then we're looking for a potential run back into, because there's not, this is the only person left in this little chess piece, in this little game we're playing here. This is the only piece left that's going to give us some resistance. So we have a run, a swing. We cleaned out all the liquidity up here. Slam down, take them out, which is what we were talking about when this was forming. We said it would run up to a premium array, slam down, and it's done exactly that. This was the fear I was telling you about. Well, you got this consolidation, the leg down. If we run up and through it, then it changes my direction. We have this as a projection. So then you'll take this and you'll do this. You'll pull your fib tool from here to here as an example. And then you go like this and you go swing projection, boom. And then you go, what's 2 to 2.5? 2.5 brings us right back into the breaker's mean threshold. 2 puts us right into the closing of this fair value gap here, back into this breaker. So that's my concern. If we break this consolidation here, that's the projection I'll use to go higher. because we're coming into lunch hour close now. So you could get that 1 o'clock run back up into the range to muck things up, back into that breaker again, and then drive it back down again. So we want to see this hold. Otherwise, this becomes a CAM Model 3 entry. CAM Model 1, CAM Model 2, CAM Model 3 is 50% of that range. So look at those. So right now we're coming into a CAM Model 1 entry. If you're going short, you want to make sure you don't lose this here now. I'm with this on the sidelines because I'm not sure what's going on here now. So that's the setup, the reversal that I was trying to explain when it was happening here. I didn't want to see this, do this, and then go back up, blah, blah, blah. But so far that's manifesting, and we don't want to see this give way. So our idea for our swing is we do not want to see this give way on a 1 minute chart. That's what I want to see. It's just this little down close candle providing us a level of support. CAM Model 1 entry for a short. You don't want to see this give way now. Pull the fib tool inside the range if you want. You get an idea of how far into that range you are for a retracement. You're up at 62% right now. So that'd be an optimum trade entry for a short. Again, we're not going to take that, but that's something you have to kind of keep in mind when you're looking at this. This would be an optimum trade. I want to see this just give way now. You do not want to see that inversion flip over and start going up higher. If it does, that's where you close out your trades, because that may be all that you get for the day, or at least for this time being, because this is just a reverse of direction. Not a break in market structure, but just a reverse direction in a time where you're expecting to see an afternoon lunch retracement taking out the previous highs, because we've been in this downward run all morning here, right? So you want to see a big retracement back into a range, and perhaps this breaker right here. Clean out all these trailing stop losses that are coming in behind them. And if not, then we want to see this padding. Nice. You want to see that continue down now. 62% is delish. Stay open. Breakaway gap. Run, run, run. Bodies of the candles are respecting this lowest down body candle right here on the swing. There's a little fair value gap right here, an inversion. So we got a body below this, create some padding. You want to see that hold. We're already in a premium already, so this would be a nice place to return off of that. See how it's bounced off that fair value gap again. Tap, tap. Good. Keep coming down. Keep coming. Let's give him some carrot. Come on down. So now you want to see this order block here give way. We validated it here. We came back into the mean threshold of it here. We popped up above it. We came back again inside this candle, ran up. Now we're getting back into our premium. So this is good. I want to see this continue down here now. Come for the carrot. You want to see that mean threshold giveaway. So when you're watching this, kind of watch the range that you're in and say, what candle is in the swing that is the highest body up candle, and what is the lowest body down close candle? Those are the two I'm playing in, and I'm looking for 1, 2, 3 PD arrays on each candle, and you watch how you bounce off of each one of those. And are you supported by an inversion? Or are you supported by a fair value gap? Or what are you supported by on the upside? And are you in the premium portion of a range? That gives this more strength, right? Because you're in the premium already. So if you start blowing through this candle and getting up higher, you think, wait a second, you've already ran up in there. If you're the array and you just, or the algo, and you've run back up into a premium already, great. You should just continue going down. And this would be the next price leg down. So, sorry. So you're looking at this price leg here, and you'd say, okay, so if I'm in the algorithm, I've run back up into a premium. I want to go back down and create my next price leg. That's the next direction I want to go. I need to get through this order block here to do that. It's a mitigation block, right? Why is it mitigation? Because it's the last down close candle that does not break an old high. So because it attempted to get above this high, it didn't get it, and we start to lose, it fails, then it's a mitigation block. And when we trade below the mitigation block, trade back to it, we're mitigating our longs to go short, and we're looking for further downside prices. So I want to see how we've already drilled into it once, run back up to a higher array, and then start drilling through it again. Theta, I have 0.707 on my fibs, and that's what it rejected from. I have 3 golden pockets. Good. I have a strange question. Maybe it's frequently asked, but I have it on my mind all the time. How long are you trading, and after what time you reach profitability? Well, that's how I'm managing it. On my live account, I'm managing it from the back end now, because I missed the opportunity to, I ignored it here, and I ignored it here, and now I'm monitoring it from the back end. So basically my stop loss is sitting right here, my fail safe is right here, and I'm monitoring this on the back end. So I will keep trading this over and over, and I will leave it overnight if I have to continue back down into lower prices, because I want Thursday's reversal to get us all the way down into that little pocket we're looking at on the daily. That's the downside objective. And I'm just trying to monitor it on the 1 minute chart here. So when I see a reversal pattern happening, then I'm out of the trade. Especially as it gets later and later in the day, you could get these kind of really crazy dynamic swings and get these whip candles back against you. You want to make sure you protect your investment on the downside. Usually I'm out of this trade long ago, but I'm fortunate right now to be I'm back in at that at 1,755, 17. Oh no, that's on that would be where I am sitting right up in here off this breaker. That's where I am in my live trade on that one. Okay, I'm going to take a break from a few minutes. I got an electrician just coming in. I'll be with you guys shortly. Just have to kind of show him around. Good. Come on in.
This has got to be.
Cool. So yeah, just let me know. And you got my phone number or email address?
I got your phone number and I don't. Awesome. Yeah, nice to meet you.
See ya.
Yeah.
Ooh, she came back against me. Well, there you go. See, there you have it. See how that fair value gap blasted through it? We had a body change above it right here. That's where you go, oh, look, we eat through the mean threshold of that order block. We trace back into that opportunity to get in long right there. There's the reversal swing, and that's where you get the long. So that's where the reversal's happening. That's what we were afraid of. And it happened right there. It's a beautiful reversal, though. Hopefully you guys got to see that. And that took my stop loss. So that's good. And that was a nice little opportunity to, so as soon as you see this reversal happening here, it trades through your trade and you go, okay, it's closed above me. So now if I'm in a downward trend here and you're in a trade that takes us down and you get an obvious reversal like this, come back and you see the body close above it. You go, all right, now it's changing direction right there. The algorithm's telling you, I'm changing direction. I'm giving you an opportunity to get your trade off or get your new trade on for the new direction I'm aiming for. Old rejection block, old high, rejection block, so on and so forth. So then, you know, you've cleaned out these old highs. You look for this guy here and you say, is this the new reversal to take out these highs to continue on the downside? So here becomes the new fair value gap. You want to see hold price to continue going higher. Otherwise, if it slams through, it's full fill right there. So if you're wrong, that's the best time to catch your long right there, right off that guy. So if you go long right there, if you're wrong, it trades back to it and gets out. That's your break even spot. So this is the best place to go long in your trade, is right there. And if it trades below you and into this with a close and the body comes back to it here, that's your break even. So I'm on the wrong side. It's changing direction again because it's taking out some highs. It's got a reversal pattern happening, but they have no body trading below it yet. We're still inside it. So if this continues to go through the mean threshold of this candle, you're still looking for higher prices inside a longer range. So pull your fib tool now from the top to the bottom and say, where am I sitting inside of this? Am I in the premium of the discount, or am I in the discount of the discount? Or am I just popping into the premium, just getting a little bit of cleaning up a little bit of trailing liquidity, and then I'm seeing the reversal back again, back down into this range here now. So you're looking at premium and discount down here. So you want to see that mean threshold, see how it came back up, wicked through it. Excellent. Hit it again. Come back, tap on this. And get long again. I have a strange question. Maybe if you're going to ask for trading job profitability, because I'm 21 and I push myself so much that doing stupid trades, not sticking to my model because I feel like I have to get in as fast as possible. Yeah, that's that 21-year-old mentality, my friend. You go at it hard, chase that thing down and go crazy. So what you want to do is find your setup, trust your setup, see your setup enough times that you can trust it. And I'll right off this breaker here. Look at this. If you miss it, chances are you can get in on this breaker. I'm going to go long on this one right here. I'm a little late to the party. Ideally, you want to sit down in here. And we're looking for just a return back up into a premium array like this guy right up here. You got to trust your setups there, Pumex. Otherwise, you're just going to be chasing price all the time, and you don't want to chase price. You definitely don't want to chase price. You want to see a setup, take your setup, and settle for nothing more. If you end up getting taken out, don't panic. Wait for the next, get in sync with it again, and get back into your setup. Wait for your setup. See that entry, your exit, then your fail safe, and your stop loss. Where does the fail safe, knowing that this trade, so right now I've just put this trade on, right? If this fails, so my fail safe is right here. My stop loss is here. So if this rips through and takes me out, I'm willing to risk 380 bucks of the whatever I made this morning, because I want this to provide a level of support. Runs the highs. If I lose this on the downside, to me, that's the change in direction, and it supports this taking up an old high, and we have run the risk of going down into a deeper discount array here. So for me, if I trade a body below that and I come back to this, then I'm on the wrong side, and I'm willing to take a loss from there to here versus all the way down to the end here. So that's my fail safe and my reason for changing directions. The market's going to change directions if it breaks through my pivot point or my linchpin point here. I would take a profit there if I had some extra on right now, just because it's getting into the lunch hour. So if it breaks this high, I'll instantly go into, actually, I think I'll go right there right now. I don't want to take a loss on this. This is probably going to come back. You should actually give it a little bit of slack, Darren. You want to see that go, go, go. This would be nice to see it stay open, but chances are it's going to come back and tap me one more time here. But that's the fail safe, and you got to have that in your trade. And if it comes back and takes you out, it takes you out. I'm down 40 bucks versus whatever. So there's the little tap that I was anticipating. It might come through here and take me out as well, because we have this mean threshold yet to go. So it'd be nice to see it hold on those wicks right there. It's going to take me out because there's the mean threshold is sitting right there. Let's put it right in here. I'm going to give it a little bit more room here. Now you don't want to, you see it come, it's all the way to the bottom. That's the ideal entry. And even if you went from ideal entry at 0.75 to your rejection block is 23. So there's like 13 handles or so there. So now I don't want to see that. It just took out that. No, I don't want to see it come back into here like that. So you move to the sidelines. So if it runs through here now, comes back up, finds support at it, we've got a, and I don't like all this slop in here. You want to see these nice reversals, like bang, get down, get to it. There's your breaker and go. You don't want to see all this kind of crap sitting in here like this. So again, your stop loss, which is down here, you want to see this hold price now, and it's wicking into it, it's still holding price. You show these concepts live on the 1 minute chart. I was wondering what What's the time chart you use to find setups with your real money account? Curious if you're comfortable swinging. Absolutely. This is the only thing I use. I use 1 minute chart, 1 minute chart. Well, what you're seeing here is what I'm maybe doing over here. But I only trade on a 1 minute chart because I like looking for this stuff, these setups, and then try to manage it on a higher time frame, saying this is what I want to aim for, and learning how to stay in it and give myself this wiggle room. You know, this huge run in here, if you were short on this and you're committed way up here and you want this to get way down here and you're willing to withstand all this, to me, this is just lost revenue. I like to get my money in, get my money out as quick as I can, and you can double down on it. So I can tell you when the directions are turning, which direction it's turning to, and you can capitalize on that real quick and grab yourself some money. And that may be in a counter trend on a run. You're expecting it to go further down, and you're counter trending this. Like we knew that it was reversing right there, right? And it's still staying in it. So we're still long right here. You're still long because it changed direction. And we saw that on a 1 minute chart, but on a 5 minute or an hour chart, you don't see that. You just see this consolidation happening here, but we're seeing a reversal. And if you can capture your money in this, you can actually catch the reversal. So you made money on the way down, you're making money with the way up, down, up, down. If you can catch these, you get really good at it. You can capture them both directions, and all you're doing is compounding your money like crazy versus trying to catch one big monster run all the way down. That's the difference between what I'm doing and what Michael does. Is he captures these monster runs down with some heavy leverage. Nothing wrong with that. He's great at it. I try to compound the snot out of my money down at these lower time frames, if that makes any sense to you. Fair value gap there. Want to turn 3 years ago on these. So far 1.5 years learning ICT and no profit yet. That's not ICT stuff though. That's your learning. That's your thing you got to overcome. See how I move that stop loss up too fast? You're chasing it, and I start getting like, I don't want to see this. Instead of just sticking to the rule of leave it alone. That's where your stop loss, your trailing stop loss is here. Trailing stop loss has to be here, and I'd still be in this trade and making some. And now I'd be moving into profits, but that's what you get when you move that stop loss. You saw me do that twice today, moving stop losses too soon. And if I would have stuck with my rules, I would have been in that quite well. I will take even longer if it will take even longer if you don't have self-discipline. Totally agree. This is how I started making money once I traded as if it was a job. That discipline is so key, Aaron. You're absolutely right. You also need to be truthful with yourself and recognize when you're gambling instead of trading. Yeah, that's so true. That's so true. It's so true. Turtle soup with the SMT when it dumped. Turtle soup with the SMT when it dumped. Oh, was there an SMT here that told you guys that this was the opportunity to get a turtle soup here? I will learn that one day. Trust me. I will get on board with that. Also need to truthful turtle soup, man. I'm T-Ping. Take profiting at the equal highs. Demoing this unusually has to take out the low before going higher. You have to move the carrot. I'm sorry, yes, I do. You're absolutely right. Move the carrot back up here. It's like abs. Where's the carrot? Put the carrot back on. All right, I think that's going to be it for me, folks. I got to get out of here. I got to get to an appointment for 12 o'clock, and I've got to walk there because my wife has the car. So it's going to take me a while to get there. So anyway, you guys have an awesome time. I hope you got to learn something here today. Yeah, you got to make some good trades. We got a really nice trade, a couple of really nice trades in today, live as well as in here. I hope you got to see some really cool stuff. Some beautiful reversal trades, some key opportunities to get in off breakers, following through with reversals again. You know, you get to see some really fun stuff here. So these have been good, and they're right at key times that we're expecting price to make these little reversals and stuff. So excellent. Tomorrow is Thursday. We're expecting the Thursday reversal. So keep your eyes. We are definitely in that range right now on the daily. Look at the daily here. That is definitely in the reversal to go higher into May. Like this could just go ripping all the way back up now. It's already dipped into that range that we're expecting for the reversal. There's the first one, second one. That's all we needed. This could be it. This could be the big run into May now. Just saying. So I'm going to go check my other assets here and look for my optimum entries, put some live cash going here, and I will see you guys tomorrow. Thanks again for tuning in. I'm Darren Hancock, and this has been ThetaWaveTrader. Be kind to each other out there. Send some love out there. Take care of each other. If you got some friends that want to learn how to do this stuff, get them on the ICT education bandwagon, and then have them come in here and we'll all practice it together.